Welcome, everyone, to this episode of the Expansive CEO podcast. I'm your host, Hannah Chapman, and right now it is Thursday, May 29th at 3:40 p.m. We are doing another episode of Investment Friday. I'm here with Brad Haines, Chief Investment Officer of Juncture Wealth Strategies. We've got some important stuff to talk about today, so we're going to dive right in. Brad, what's the big news from last night into today?
Well, the big news was about the tariffs. So the Court of International Trade has basically ruled the Trump administration cannot apply tariffs using using the National Emergency Act. Okay,
Right.
it's an act that has never been used to apply tariffs. But essentially, the argument was that the Trump administration was making was it's a national emergency because it affects the finances of the US government. And it's been going on for so long that now it's a national emergency. So we're going to apply these tariffs, which will raise new revenue stream, right? Which is new revenue stream is ostensibly a very good thing for the US government. So it doesn't have to come out, quote unquote, doesn't have to come out of our pockets as consumers. Okay. That was the thought.
I'm
That was the
rolling my
thought.
eyes super hard,
Yes, I
by
know.
the way.
That is the argument being made. Um, and basically the justices said that doesn't work. You can't use um, that particular legislation to apply these tariffs.
Right.
If you're going to do that, you have to have Congress legislate those tariffs and then you sign it as a law. Okay. Or you find another act upon which you can then rely on this authority. All right. And so, do we have tariffs being applied? Well, as of right now, no. In fact, the court ruled that the federal government has to disgorge all of the tariffs that have been collected from during this year, basically. And so not only do they have to stop doing it, they have to actually disgorge all of the revenue stream that has happened. Now, one of the things that we're going to talk about is one, this goes to a lot of what we said about Trump in his first administration, which is he's an agent of chaos, and he doesn't necessarily. I mean, he cares about getting policies implemented, but the way he goes about doing things sometimes tries to circumvent the law when, I mean, he controls both houses of Congress. He
Mhm.
legitimately can go in and get these tariffs passed as a matter of law. Then it becomes much more solid. He'll definitely sign it. So then it's a law. And there's nothing illegal about that. The courts are just saying, hey, you overstepped your bounds, your executive authority. You can't do that unilaterally. You
Right.
have to include Congress, or you have to rely on some other law that gives you that power that is more legitimate than the national emergency. Um,
And I'm also seeing literally, this afternoon, Trump administration obviously appealed that today, and an appellate court said that there needs to be more discourse. Like the lower court has to respond by June 5th, and then the administration has to respond again by June 9th. So they are, as we would have expected, because the stock market overnight rose. Asian markets did really well last night, US time. So we had this like surge upward this morning, which has since, tapered over the rest of the day. We're a little bit up on most of the indices, but it's flattened out quite a bit. Because again, it's like, is this real or is this not real?
right. It's
And so
just
that's exactly
introducing,
where we're going right now.
yeah, it's introducing more uncertainty. Are we going to have tariffs? We don't know. What it does do is there has been only one trade agreement signed in 2025, and that was with the United Kingdom. And just a reminder, the United States has a trade surplus with that union, with United Kingdom, with the United Kingdom, Great Britain. So that was a really easy one to get done.
Right.
All the European Union, Japan, Vietnam, China, obviously, um, that puts all those trade negotiations on ice because why would you negotiate if you're not going to have any tariffs, right?
Right.
So it really plays to um if the Trump administration would have done this the right way, that this would already be a law, and we would have already been legally applying tariffs, and everything would have been but the problem is the way they're implementing things. They're trying to do things so fast. They're trying to skirt the normal policies and procedures of the US law. And so it just makes no sense on how they're doing things sometimes. Now, it's irrelevant whether I think it's good or bad policy. It's just the way they're going around trying to implement it. They're doing it, and they're trying to skirt the law in that way, which is dumb because they have both they have both houses in Congress. This is a new revenue stream. This would actually increase our revenue. I think they could get it through pretty easily. Now, there are certain Republicans that are going to uh,
Push back.
push back on it because they're more free trade, right? But this is kind of in the Democrats' wheelhouse in terms of, yeah, we like new revenues that we don't have to increase, quote unquote, increase income taxes for, because a tariff does generally come out of the consumer's pocket, or it comes out of the pocket of the business that's importing. Either one or the other, or a mix of both. It's an indirect cost. It's not, hey, here's a bill on April 15th for an increased amount of your income. So it's a little easier, it's a little more palatable to sell to the citizenry. Um, so again, I just think the way he's implementing it is kind of bizarre and odd, but you
Yeah, I
know,
mean, our, junior high and high school civics classes taught us that Congress has the power of the purse, um,
yes,
for a reason, right? And so that's what's been circumvented this whole time, is that Congress is supposed to, and even with the, everything that happened with Doge, they were reappropriating funds that had already been appropriated for certain things. And so like all of these different um attacks against that particular power of Congress, which is actually one of the most important ones.
yeah,
Um, I mean, I think it's really important for the courts to be pushing back on this, to say, hey, we have these things in place. When I was talking to my husband earlier, we're talking like it's supposed to go slow. Things
yeah,
like this that have this big of an impact are supposed to have discourse, have back and forth. That it's not like you just get, I want to do this, so I'm just going to do it. I want 145% tariffs on China, so I'm just going to say it, and that's what's going to be true. Like that is really, really hard on the economy, on the stock markets, on consumers. The amount of uncertainty that creates, we can't digest it fast enough.
right.
And that's what we've been seeing, where, I mean, God, it's been 4 months since Trump took office, and it's like
Feels like 4 years,
it feels
right?
like 4 years already.
You know, it's
Um,
it's interesting because this is one of the reasons that I think a certain number of business acumen is required to be should be required to be in a Congress or in an executive position. But the downside to that is if all you've ever done is own your own businesses and you have complete and utter control over everything in that business, the government is a far cry from that.
right,
Okay.
yeah, being the CEO and like the main, the spearhead of a business is very, very different from being president of, a three branch co-equal government.
Yeah,
It is
of
not the same.
360 million people. I
Right,
mean, people, in theory, they're like, oh, well, wouldn't it be great if we could just do this? Well, until you get someone in power who you disagree with,
right.
right? So then you're like, oh, well, I'm really glad that we can really slow this down. And I think it's important for, regardless of anybody's political persuasion, um, the Constitution was set up to avoid having a king or an autocratic ruler, and it gives the people a way to, again, checks and balances on Congress, on the executive branch, on the judicial branch, There's all checks and balances for very, very good reason. Um, so do we have tariffs? Do we not have tariffs? My guess is we're going to have some level of tariffs, but they have to go, they're going to have to go back to the drawing board. And I think eventually they're going to have to get it passed by Congress.
Hmm.
Um, which if I was President Trump, I would be calling in the Republican leaders of Congress and saying, draft a bill quickly and let's get this through. I mean, there's no reason that he shouldn't. He because as of right now, he has the majority in Congress purportedly, and it should be an easy deal. But if he doesn't have that, it derails his one big beautiful bill. So that's the tax cuts. That's part of the reason that the equity markets have run up from negative 20% to essentially low single digit negative is because we were going to get some stimulative tax cuts in addition to having some of these tariffs. So it was going to help augment the economic growth during a time where tariffs may slow down the trade sector quite a bit. So again, it slows down all of his legislative priorities until he gets that bill done.
Hmm. Well, and um, we were texting earlier, I reminded you that there's not 100%, support by Republicans in the Senate right now. The House is a little bit more buttoned up, but in the Senate, I mean, I was super surprised that Mitch McConnell did not, which I can't remember which legislation it was recently, but he and three other Republicans, or he and two other Republicans, defected and did not vote with the Republican cohort, and that killed the legislation that they were trying to pass. And so that piece to me, also says like they have to compromise. If things are really going to get through, even with the tariffs, if they were to like just try to do exactly what Trump is saying that he wants, they're gonna have to compromise in order to get it through the Senate. And which is what we want. We want the back and forth. We want them like, here's what we think is good. All right, well, we don't like that. Here's what we think is good. And like go back and forth until it works. Because it's going to moderate itself at
Yeah.
least a little bit.
Yeah, I think what's been lost, and it really started during Obama's first administration, where um, Democrats and Republicans have forgotten that as a politician, your job is to compromise.
Right.
That's your whole job. Okay. You have one set of ideals, they have another set of ideals, and you come together and compromise so you can accomplish the best of both sets of ideals. And unfortunately, since that time, we've seen this separation of I'm going to die on this hill for no reason.
For everything.
Yeah, for everything. So even little things is like, well, you're a Democrat, so I won't support that. Well, that makes no sense. Your job as a politician is to compromise,
Hmm.
okay? And to hopefully get closer to your ideal, but to you have to give up something. And unfortunately, we have some politicians, and I think it's on both sides. I don't think it's on one that really have become fairly partisan in their politics. But what does that do to the equity market? Well, it just it just throws a lot of the earnings expectations for 2025 out the window because you just don't know. Like if we don't have tariffs, the economy's probably going to accelerate here towards the second half this year. If we do have tariffs, well, then they're going to get applied, and that will slow the economy even further uh, at a time where we have mixed data. Some data
Hmm.
is pretty good, other data not great. So, and usually at economic inflection points, you have this mixing of the data, right? And we've talked a little bit about that. And so we're still in this decision period in this inflection point in economic growth to see whether we are going to go into a recession or whether we are going to reaccelerate um, back up the economic curve.
Well, I am literally trying to buy a couch, and just trying to figure out if I have to plan for the tariffs on the couch or not. So
As of
like
right now, you don't.
I know, right? I'm like, okay,
So you want to buy it now.
let's buy it literally right now. Because last week we might have had a 30% tariff, but I'm not sure. I emailed the company or I sent in like a contact, like, where is this coming from? Do you know if there's going to be tariffs placed? I got the most round, like non-answer. It was so frustrating. But I mean, like I say that to say like I'm literally dealing with that. Like as a single human here, it is actually affecting decisions, right?
Yes.
Like it's not an arbitrary thing. It's not and we'll say this too with furniture, it's not every option is available from, a fully American made company. It's just we don't
No.
have all the options.
No, we have a global supply chain, and that has taken place over 40 to 50 years.
Right.
So we can't turn that around on a dime. That will take a number of years to get back into place. And there are just certain products that will never be made here because they don't have a lot of value added. So if people want to understand what's going to be made in the US, what we make in the US is high value added products and services. So
Hmm.
ones that take a lot of design, a lot of engineering, a lot of um, really, it takes a lot of expertise to do it.
Hmm.
That's what we make because we can convert our knowledge and expertise into higher revenues. And so that's why, the comment about someone doing the little screws in an Apple factory, that those jobs are not coming to the US, or they're coming in a fully automated way. And that's a different criteria altogether. So
Yep. So as we said, gosh, early this year, late last year, um, I really appreciate the analogy of the ocean and the tides, that the stock market, the business cycle, it runs like, the moon pulling the tides. That is the business cycle is the thing that's making the biggest, the big movements that we can rely on in some ways, and they will shift and change here and there. Um, but we can predict them in some ways. They have fundamental truths about them. And, politics and policy and a lot of these other things are like storms that whip up the waves.
yeah,
So Trump is just like a massive storm that is really, like really whipping up the waves a lot, like causing chaos, causing, different things to like to make people feel at times like things are fundamentally changing. And then we see things like last night where, a court comes in and says, you can't do this. These are nullified. And now we have to have a new conversation that just like in one moment can, of course, he's going to push back on it, but we can see in one moment the storm can be calmed a little bit, right? And so the waves calm down and the tide keeps going in and out because that's what our fundamentals are based on.
yeah,
So
and that's exactly right. And that's why, I mean, beginning of the year, our expectation was we were going to have a kind of a break-even year on equities, but it was going to be volatile for the first 6 to 9 months. And so far, that's playing out pretty accurately, pretty
so far
perfect.
we're geniuses.
Well, I don't know about geniuses, but that's turning out.
Right.
So we'll see how it all continues as the Trump administration is appealing. So we'll see over the next couple of weeks. But you had a second point you wanted to talk about.
I did, and I think this one's really important as well. I come across a lot of people who want to know how to make money fast, right? Like I've got $10,000 or I've got, 15, 20, $50,000. I want to make quick money with it. What can I do? And they want to look at really cheap stocks. They had, someone told them about XYZ stock and you look at it and it's what's called a penny stock. And I actually had a client, or have a client who did invest in a penny stock a few years ago. She invested $5,000, and the person that made the recommendation, was not a financial advisor, but kind of held himself out as a financial professional, had done other, helped other people make money um, by, picking various stocks. So she trusted him and said, "Oh, well, I know this person made money by, doing one of his picks." So she went all in. She had $5,000 to invest. She put it all into one stock, and within the next couple of years, it just gone. It's at zero, and there's no, that company is not, I did all the research I could to find out if it was maybe going to come back, and there's just nothing out there. And I wanted to talk about that. What is a penny stock? What is a speculative stock? Because we'll talk about how those are related. Um, and what does that mean? Like, how do you do your own research? A lot of us now are like, we're expected to be able to do our own research to understand how things work, all of that. So this is one of those areas where I think a lot of people, more than want to admit, have tried to play in this sandbox a little bit and lost a lot of money. And I just think it's a good place to, shine the light so people can understand what they're getting into. And if they do want to play with some speculative things, how do you do it in a smarter way?
It's a great question. All right. So penny stock, let's define what that is first. Okay. A penny stock is any stock that is not listed on a major exchange. So it's what we call pink sheets.
Hmm.
And that goes back to the history where there was a book and it used to have pink sheets where that's where you would look up information about these stocks. But there's a couple of the characteristics that really go with these stocks. One, they're less than $5 a share. So they're very inexpensive on a per share basis. They have very low liquidity, meaning there's just not a lot of trading volume. There's not a lot of people trading these stocks. And two, they have uncertain financials and opaque financials. A lot of
Hmm.
times you can't get information on them. Um, my general rule is you stay completely away from them. 100%. Don't even look at them. The the per, the the probability of one of these penny stocks trading above $5 a share, so it's classified as not a penny stock, is extremely, extremely low. So, if you're really looking to do investment and grow your assets, there's lots of really aggressive growth companies out there that are smaller. You can get them for $10 to $25 a share, and they'll give you as much growth as you can handle and much speculation as you can handle, but they're traded, they have higher volume, and you can get information on their financials. Um, so that's where I would go if you want to quote unquote speculate. Now, what is speculation? What is a speculative stock?
Hmm.
It's interesting because that definition changes over time. When I first started managing money and getting involved in the financial business, um, a a speculative stock was any stock that didn't pay dividends.
That blew my mind. I was
Yeah,
really
so
surprised to hear that.
yeah, so generally to be a blue chip, back then we used to call them blue chip large cap stocks. Okay. That's kind of that term, well, at least blue chip has kind of gone by the wayside, but generally a blue chip was a large company, well known, solid, financials, paid a dividend, and you could hold on to it for a long time. All right. So anything outside of that kind of was considered speculation to a certain extent. So you have to remember when I got in, this was back in the early 90s. So this was pre-internet boom. During the internet boom, that changed because now
Hmm.
you had very large companies not paying dividends, but yet still getting really good returns and very solid balance sheets and very high liquidity. I mean, you had Intel, Cisco, Microsoft. Some of these are still around today and doing quite well. Um, Oracle. I mean, you had all of those companies that then all of a sudden people started to morph saying, Well, maybe it doesn't. Maybe a large cap blue chip company doesn't have to pay dividends. Let's look at their earnings. Let's look at their revenue streams. Are their revenue streams pretty solid? You know, Apple today, very solid revenue streams. Cash flow, they print cash flow based on their
Right.
services and their products. I mean, I think everybody that's involved in the Apple ecosystem knows that it's very difficult to leave that ecosystem. So they're perfect for a blue chip large cap company. So I wouldn't consider them speculative by any stretch of the imagination. But speculative can be anything outside of, it's a company that one, you don't really know that much about. Two, you're investing in it based on a macro theme. Artificial intelligence is a great one today. There's a lot of small companies that are very aggressive that are somehow involved in artificial intelligence, whether it's, making some of the hardware, whether it's making some of the applications where they are now developing they're developing artificial intelligence tools in one specific industry. Okay. There's lots of those companies. They're very aggressive. Most of them won't be around in 10 years,
Hmm.
but some of them are going to crush it, and they're going to go up, they're going to double in value. They're going to go up 5 times in value. They're going to go up 1,000% in value. There are some of those companies out there. You just, for speculation, you have to find them. And my general rule is, if someone wants to speculate, I don't ever recommend it. Okay. But if they do, have it be a very, very small percentage of your overall portfolio, because you have to understand that most of these companies won't be around. And
Hmm.
so we don't want it to harm your overall portfolio enough for you not to reach your financial goals. We got to keep that in mind. So
Right.
if it's a little play money you want to do on the side, great. Knock yourself out. But just definitely keep in mind that your first goal is to get to your financial nirvana here in the next over the next whatever your time horizon is, 10, 15, 20 years.
Right. And that's in my language. The way I would say that is like, don't put anything into speculation, speculative spaces, stocks, whatever, that you can't afford to just fully lose.
Yep.
That if it goes to zero, you're like, cool, that's a tax, I can take the write off basically. Or, capital, you take a capital loss on it. Um, because yes, if it's something that you are going to need, if you're like, I'm going to buy a house next year, don't put that money into anything even slightly speculative. I mean, I wouldn't even put that into the market, into blue chip stocks, right? Or, like anything that tends to be more stable, right? We have to understand what your timeline is. And we also need to understand what can you actually afford to fully lose. And if you hit it big or even like make your money back on one of them, that's awesome. Congratulations. That was like, a windfall. But we still have, 95% or more of your portfolio over here in your long-term goal bucket, or your, long-term plan bucket, maybe.
Yeah. I liken the probabilities to somewhat to be like private equity. Okay. Private equity is essentially when you commingle your assets with a bunch of other wealthy investors, and then you hire a manager, and then the manager goes out and buys these private companies, and hopefully over the next 10 years you're going to crush it in terms of return. Okay. That's kind of the idea as to why you do private equity. Is it's a very long-term investment. You're buying companies, not stocks. You're holding on for 10 years. But in general, the percentages kind of work out, from memory, is about, out of 10 holdings in a private equity portfolio, 6 of them don't do well. They turn out to be kind of big losers. Okay. Two or three of them turn out to do okay. and they kind of muddle around. They're doing okay, but nothing to write home about. And then one or two of those portfolio in the portfolio are going to do very, very, very well. And that's who you're trying to find.
Hmm.
So in any speculative portfolio, and forgive me if you're in the private equity space, I am not trying to say you are speculation because you guys do a lot of fundamental analyses. That's what I used to do is value privately held companies. So, but I think those percentages do tie out to the speculative type companies we're talking about. And as long as you have those in mind and say, I'm only looking for that one out of 10, well, you got to buy the 10 to get to that one because you don't know which one it's going to be.
Right.
So you got to keep taking that. And as long as you do that and it's a small percentage of your portfolio and you really want to do it, then that's fine. But it is somewhat it's not quite as bad as buying a lottery ticket, but it's uh it's difficult to get a penny stock that's going to go above $5 a share.
Yeah, and that's as a CFP with my licensing, like I'm actually not even allowed to recommend penny stocks to people. It goes against the prudent investor standard. And so I'm like I would be subjecting myself to, possible disciplinary action by recommending those things. And I think that also it's just important for people to hear because they don't necessarily hear that or know that. If I'm not presenting those kind of opportunities to people and they're like, well, this other person is telling me, they bought all these and made all this money. I'm like, you know what? They probably, that's like you said, that's a 1 out of 10. Yeah, that one worked, but which ones didn't? And there's a reason. There is a very solid reason behind why we don't actually recommend those things and go out of our way to try and sell them. Um, and so it's just it's an interesting piece of the industry, right? That we are held as CFPs and as financial advisors who are licensed in different ways, like we are held to a different standard of prudence for our clients. Um,
Yeah.
it's important.
I There's a study in the Journal of Financial Economics, which is one of the premier um, academic journals for financial economists, uh, reviewed penny stocks, and they said about 90% either stagnate, decline, or go to zero.
90%. So
90%.
we're right, 1 out of 10.
Yep. And they said big winners are very, very rare. It's around 5% actually grow above that $5 per share and stay there.
Oh,
They might pop above and go back down, but they said so they're highly susceptible to manipulation, right? Think of the Reddit threads where there are
hmm.
pump and dump schemes where someone would talk up the stock because they have low volume, the price appreciates really quickly, enormously, and then whoever's pumping that stock on Reddit is now selling it
Right.
when you're buying it in. So they said, it's there are some outliers, but they are exceptional outliers. They're not the rule. They're not, they're very rare. So just
So,
know that going in.
yes, if you have questions or if you have bought a penny stock and you don't know if it's like even valid anymore, you can do some research, find out about that. And if you want some solid, researched, prudent investment advice, you know where to find us. So that's it for today. We're going to wind it up. And next week, I'm going to be literally on the road driving. So we're not going to have an investment Friday next Friday, the first week of June. But we'll see you from my new office in a couple of weeks.
Yes, you will. Yes, you will. I think I'll be in Arizona the second week in June. You may or may not be available. We'll see how
Maybe.
your move goes.
Yeah, we'll see. Maybe we'll record in person. That would be fun.
Yeah,
So,
that'd be great. That'd
all
be
right.
great.
If
So
anyone has any questions, all of our contact information is down in the show notes. And as always, we love to hear from you. We love to respond to what you're feeling right now. So thank you for liking, sharing, subscribing, and send this to anyone you know that might need a little boost of confidence. Thanks, everyone.
thanks.
That's it for this episode. Thanks for listening, and be sure to like and subscribe. And again, if anything resonated with you from this episode, I would love to hear from you. Email me at Hannah, HANNAH, at expansiveceo.com and tell me about it. And if you're ready for your greatest expansion, you can find ways to work with me at expansiveceo.com and at x2wealthplanning.com. That's X, the numeral 2, wealthplanning.com. So until next time, remember that there is enough, you are enough, and your birthright in this lifetime is to be expansive.